Hi there, welcome to Kneppy Invest. Time is currently 4:34 p.m. on the 30th of June, the last trading day of the month and the last trading day of the week. And I've decided to do another weekly wrap-up video. And I've decided this a few days ago because there were a few interesting announcements released through the week, and I wanted to go through those announcements. And then at 6 a.m. this morning, there was a message on my phone asking if anyone wanted to do an emergency shift. Someone called in sick. And I said, I can do it, but I want to work from home. And the reason I wanted to work from home is because on my lunch break, I wanted to do this video. However, my lunch break had to be taken just after market close, which was 4:10 p.m. So 4:30 p.m., this is my lunch break. So I have a little bit of time to record this video. So I'm going to go through some interesting announcements that were released during the week. Now, how I define interesting is completely subjective. It's what I find interesting myself. And a lot of these announcements are simply trading updates. My favorite type of announcements, trading updates, can be profit upgrades, profit downgrades, or those sort of trading updates where they just confirm the company is moving in the right direction, or just confirming or reconfirming previous guidance. So let's start. And this isn't any order. This list of about 25 companies isn't in order of importance. It's just those companies I saw first, I will look at first. So Veem's announcement was the first announcement I saw on Monday, the 27th of June. And this was a trading update for the company. And I have looked at Veem a few times in the past. And one of the reasons, apart from the trading update, I wanted to include Veem in this video is just where the share price is right now. It's just above a very, very extremely, really important support level at around about 38 cents. Now, this particular trading update was positive. It wasn't negative. So they expect that EBITDA and profit to be ahead of analyst forecast of $8.3 million for EBITDA and $2.9 million for profit. However, the market didn't really react positively to this announcement. Didn't react negatively, didn't react positively or negatively. But the share price is where the share price is right now is the most interesting thing at a very important support level. And that support level was really set up in 2018. So this is going all the way back. When the share price hit 38 cents, we saw a bounce. Share price hit 38 cents in June, July of 2020. Then it bounced again. And the share price hit 38 cents again in June last year, exactly 1 year ago. And then we saw a nice little bounce. But unfortunately for Veem, share price is still in a downtrend. Now, if the share price can remain above 38 cents, now might be a time to think about taking a position in this company if you are bullish about the future of Veem. Sort of a low risk potential position, even a trending position, because if a share price falls to say 35 cents, that could be a sign that the wariness of the market hasn't finished. So for some reason, the market is wary about this company, even though this was a positive announcement. And that's why the share price is at almost all-time lows. So main thing you want to see, particularly if you're a shareholder of this company, current shareholder, the share price can't fall below this support level for an extended period of time. It can fall briefly, test it, and then go back up. But if forced to say 35 cents, it remains below 38 cents for a period of time. That means this support level has been broken and the share price could fall significantly further from there, unless the company keeps releasing sort of positive announcements like this. Next announcement was a takeover bid. Takeover, merger, whatever you want to call this, by Perento or for DDH1. DDH1 is a drilling company. Perento is a mining services, mining contracting company, by far the bigger of the two companies. And what was really interesting about this, or the reaction from the market, was fairly negative. Share price just before this announcement, so last week, was around about $1.30, and the current share price of Perento is just above $1.02. So in fact, share price did close at $1.02. So about a 30% drop in share price on the back of this particular takeover of DDH1. High volume as well. So the market doesn't like this for some reason. Haven't gone through this particular take over all that closely, but definitely something in there doesn't like. And the share price of Perenti is just above a nice little support level at $1, right on $1. And that support level really began as resistance back late last year. It was tested in March. You can see a nice little bounce in March. And again, just like Veem, if the share price of Perenti falls below $1, that would be a negative sign and a bearish sign at that. The other company within this takeover bid was DDH1. So let's see how DDH1 performed. Now, on the day this takeover bid was announced, there was a positive reaction for DDH1, which is understandable because typically there is a premium to the current share price. And the share price of DDH1 went all the way to a high of 96 cents on the day, which was the Monday. Really high volume as well. So the market initially liked this announcement, but then the selling came in, continued high volume as well, and the share price dropped all the way back down to 83 cents. So share price has gone from 96 cents to 83 cents. Share price has been a downtrend, so nothing too exciting when we look at DDH1's share price and chart here. Probably the only other thing I'd probably pay attention to is what sort of premium and how much DDH1 shareholders get out of this announcement. Do they just get shares, that sort of thing? Do they get any cash back? All those sort of things. So again, I haven't gone through the particular takeover bid, but that's very important. Do you just get Perenti shares or do you get some cash back? Next interesting announcement was full year results from Metcash. And to be fair with you, this was a pretty good year for the company. And you can see that in the highlights section, talking about a record year, outstanding 3-year performance, revenue up 6.2%, underlying profit up 4.6%, operating cash flow of $372.7 million, and dividends up 5% to 22.5 cents. They also mentioned that solid sales growth has continued into early financial year 24. So the performance of the company has kept on going. This is a staple, consumer staple, not consumers discretionary. So we shouldn't expect inflation to have a massive impact on this company unless they can't increase the prices of some of their products. Unfortunately for Metcash, share price of the company was in a downtrend before the release of these full-year results. So even though the market did react positively, the share price is still in a downtrend. So no signs of a downtrend in the share price of this company coming to an end. Share price is still below the 150-day moving average. Share price has not got above the previous highs we saw back in May. So no end in sight to the downtrend in Metcash, even though this was a good announcement from the company. Next company I want to look at is Step 1. And where's the announcement? There it is. We'll just bring that down a little bit. And this was another positive trading update, financial year 23 trading update. So you'll notice I am looking at a lot of trading updates. So again, these are my favorite types of announcements. And this was actually pretty good. Talking about EBITDA expected to be between $11 million and $11.5 million, a bit of an increase from last year, which was $9 million. Revenue expected to be about 10% below the prior year. So revenue down, but EBITDA up. So without doubt, they have curbed some of their spending. Now, when the company did release this particular announcement, the share price was up 16.7%. And the reason I got a little bit excited about this announcement was the share price opened and closed above a resistance level. That resistance level was 37.5 cents. So we have seen a share price really struggle to get above that level. So you can see back in August last year, it got to that level and then pulled back. Back in February this year, it got to that level and then pulled back. So what happened on Monday? It got above that level. So one step towards this being a breakout for Step 1. If you don't know what Step 1 does, they manufacture underwear, that sort of thing. And I did actually hear the CEO speak once, and he said the whole reason he wanted this Step 1 underwear to be manufactured is because he was never comfortable wearing underwear when he went from hikes or runs. I do not have that problem because I don't wear underwear when I go for hikes or runs. I wear specialized, what do you call them? The skins, whatever you call them. Anyway, so what I wanted to see after Monday was the share price to remain above 37.5 cents. And of course it didn't. So let's just zoom in there. So the share price the next day on the Tuesday fell below 37.5 cents. In fact, it closed at 35.5, and the share price has remained below that level. So this was another false breakout. And this just reconfirms that 37.5 cents is a really strong resistance level for step one. It needs to get above that level and remain above that level before I get excited. And you just see the share price just going sideways. And this is exactly what you want to see. You want to see share price consolidate for a long period of time, and then you wait for that breakout. So I am paying attention to step one's trading just because I'm looking for that breakout. Next company is, well, this is a negative announcement. Lark Distilling, net sales for the second half forecast to be 7.4 million, down from 9.6 million in first half, resulting in a full-year estimate for financial year 23 of 17 million. So negative announcement from Lark Distilling, and that was seen in the share price down 16.3%. The next day was down 4.4%. Then the next day 7.3% before we have seen a little bounce, and we have also seen some really strong volume. So this just reconfirms that the share price of this company is in a downtrend, and you can just see. So the 150-day moving average is that solid blue line, and when the share price of Lark Distilling gets to that level, we see a bit of a sell-off. So that is our resistance level, and this is just a classic downtrend. And this, so the market was expecting some bad news from the company, and the company gave the market the bad news. So a lot of times the market is right. Very rarely the market is wrong. On occasion it is wrong, but in this case, the market was expecting bad news, and the market got that bad news. And even though the market did get that bad news, you still will see the share price drop, because there's probably some people in the market who sees the share price significantly lower than it was, say, a year ago, and think, wow, this is great value. Then the company releases this sort of trading update, and those people who just bought in because they saw value go, ooh, maybe it's not good value. That's why the share price drops, even though the market was expecting it. Next company is Wesfarmers. This is another takeover. Wesfarmers is a conglomerate. They own lots of stuff, and looks like they're going to own another stuff called, what's it called? Silk Laser Australia, to acquire 100% of their shares for $3.35 cash per share. The market was ho-hum for Wesfarmers, so won't spend much time on Wesfarmers. But Silk Laser, which I haven't looked at this chart ever, and then I was just shocked. There must have been a few takeover offers for this company. The first one would have been back in April. It's just the share price increased significantly, and the share price went sideways. There was another takeover bid on the 23rd of May. Share price went up, and then that takeover bid must have failed because the share price absolutely plummeted, and then another takeover bid from or by Woolworths for this company. So a few takeover bids, it seems like, for Silk Laser Australia. Other than that, the share price before this excitement in this company was in a downtrend, was trying to move into an uptrend before the first takeover bid, and maybe the market was thinking, hey, there might be some takeover bids for this company, or there was some people in the market who knew about the first takeover bid. Anyway, I don't buy companies just because I think they might be taken over. Never do that. I don't do that anyway. A company I don't think I've ever mentioned in my video or this channel is Senetas. This is a company I owned about 10 years ago, and I don't really follow this company anymore because they just haven't executed on their plans. And this is going back 10 years ago. And this, again, is just a trading update. I haven't really gone through the trading update, but it was positive in a way. We'll say just positive. They just mentioned good sales momentum and continued signs that the global shortage of electronic components is easing have contributed to solid growth in Senetas segment revenue. But just look at the market reaction. There was almost no reaction from the market at all, and the share price of this company is still in a downtrend. In fact, the last time the share price was this low, was way back in 2014. This is when I got interested in this company and was a holder. Back in 2014-15, the share price went from about 2 cents all the way to a high of 22 cents. So the market was interested in this company, but they just haven't executed at all. That's the main problem with Senetas. And there's no reason for me to do a video on this company because I need to see signs that this company is executing before I get excited about them. Now, a company I am excited about is Ventia, and they signed a significant contract with the Department of Defense totaling $393 million over a 5-year period, with a possible contract extension of a further 5 years. This company has annual revenue of about $5 billion. Now, what they do, there is fairly low margin. So even though they have revenue of $5 billion, their profit is something like, or just below $200 million. But the share price is in an uptrend, a beautiful uptrend developing. Share price is getting towards the highs we saw back in September. If the share price can get above $3.10, that means the share price of this company would be an all-time high. It hasn't been around for that long, listed on the ASX back in late 2021, but things are moving in the right direction for this company. Now, a couple of problems I do have with this company: low margins, whether there's going to be significant growth for Ventia over the next 5 to 10 years remains to be seen, but they have been growing over the last few years, and I have taken a position in this company just because the share price is in a beautiful uptrend, short-term uptrend, albeit, and if the share price does get above $3.10, there will be no resistance moving forward. And the PE ratio of this company is really low. Last time I looked, it was like 12. And you also get a nice dividend yield of about 6%. And if the company keeps on growing, dividend yield could keep on growing, and the share price could grow or should grow with it. So definitely a company to have on your watch list at the worst or the best, but definitely a company to do a little bit of research on. And next company I'll look at is Appen. I did notice, the share price on Monday dropped, what was it, 12.3%. And the reason behind that drop in share price was because the CFO suddenly resigned for personal reasons, which could be for anything. Maybe they have some health issues, but the market doesn't like this sort of uncertainty. The market also doesn't like the sort of what's the word, where it just doesn't look good. That the CFO is suddenly resigning. It does look bad. It does look fishy. That the CFO knows something, and that's why they're bailing the ship, the sinking ship, possibly. And so the market didn't like it, but the share price has nicely bounced very mildly over the last 4 trading days. And the share price on the Monday did get very close to the bottom of the trading range in a really good support level. So that's to be expected. If the share price falls below $2.20, that will be very negative. It did look like a possible breakout for Appen going back to early June, but that failed breakout, or that possible breakout failed because the share price has fallen back all the way from almost $4 all the way back down to $2.30. Share price closed today at $2.39. So a lot of volatility in this company. AI, that's why the market got excited, and then the CFO resigned for suddenly, and the market doesn't like that. Okay, Nyrada. Ooh, this is ugly. We'll bring that down there. I don't know much about this company, but I do listen to, Small Caps podcast, and Tony Lecantro does mention this, or has mentioned this company a lot. It's a biotech without any revenue, and these biotechs can provide really bad news to the market, and that's exactly what Nyrada did in relation to their cholesterol-lowering potential drug. Pathology analysis reveals adverse signal observed in final toxicology study, precluding Nyrada's drug candidate from clinical evaluation in cholesterol lowering. Phase 1 to a study deferred, and naturally the market absolutely hated this. Share price fell on the day by 55.7%. Now, you had no reason to be in this company because the share price was in a downtrend, and this is why sometimes it's wise to just look at what the share price is doing. Share price of Nyrada was in a well-defined downtrend. This is the very definition of a share price in a downtrend. No reason to be excited about this company. And this is the reason why paying attention to charts is very useful because it'll keep you out of companies like Nyrada, and the share price has just kept on falling. So on that day, the share price closed at 3.5 cents, and the current share price of the company is 2.8 cents. So even if you did get out on the Monday at any time during the day, and preferably you got out at the start of trading, you'd still be better off because the share price has continued to drop. So I don't know anything about this company except this is not a good announcement. And we know that because the market reaction and just the wording in the announcement itself. Next company is Metal Hawk. The main reason I wanted to include this company was just the reaction of the market. So this was a thick, high-grade rare earths discovered in maiden drilling at Fraser South. So to be fair with you, the market loves these sort of announcements. You see share price increasing by over 100%, 200%. And for Metal Hawk, the share price increased 112.6% on the day. And then day traders get excited. And then you see a lot of volatility. The best thing you see when the share price of a company increases 112% is you want to see the share price not absolutely implode the next few trading days. Unfortunately for Metal Hawk, the share price dropped 21.6% on the Tuesday, dropped another 10.4% on the Wednesday, and then another 7.7% on the Thursday. We did see a nice little bounce of 8.3% today, the Friday, but again, that initial excitement from the market has been overwhelmed by a fair bit of selling. So this was a false breakout, and this is another reason why I tend to want to wait when I see the share price increase by over 100%. I tend to want to wait just a few days just to see if the market remains excited about the announcement. In this case, it was just a one-day excitement, and then the day traders got involved, and we saw the share price plunge. It's not surprising share price plunge because the share price on the day, even though it increased by 100%, was actually higher last year. So most of last year, the share price was higher. So there's a lot of resistance moving forward. A lot of shareholders bought into Metal Hawk at higher prices, and they saw the opportunity to get out. So the supply was just overwhelming, particularly on the Tuesday, overwhelming the demand. There wasn't enough demand. That's why the share price dropped 21%. And then you got the day traders on top of that who failed this day trade. And I say a lot of day traders probably lost a fair bit of money on Metal Hawk. Next company is Collins Food. I've already talked about Collins Food. They did release their financial year 23 results, and the market absolutely loved it. So I did a standalone video on Collins Food, and not only did the share price really go gangbusters on the Tuesday, up 17.7%, the next day the share price increased another 7.5%. So I think this is a breakout. This looks like a classic breakout. Share price was in a downtrend. Share price broke out above that downtrend, and the share price kept on going up. And we've just seen the share price go sideways the last few trading days, but that's okay, because if we look at the share price, go back here, say the second half of 2022, there were a fair few shareholders who bought in at these prices. You just see, if you just imagine the share price between about $9.60 and $10 and as a zone, and a lot of shareholders bought in that zone in the second half of last year. So that's resistance. And the very fact that the share price hasn't plunged is telling me there's enough demand for Collins Food shares to buy into that extra supply of those shareholders who bought in the second half of last year. So this is a good sign moving forward for Collins Food. So if you're a KFC lover, Taco Bell, although Taco Bell is not performing that well, this is good. Although KFC would not be as discretionary as you might think. I would not call it discretionary at all. You get some good deals at KFC. That's pretty nice as well. Next company is Bega Cheese. Another trading update and sale of Port Melbourne site. If it's interesting enough, the Bega Group confirms its previously announced normalised. I hate when they include words like normalised, adjusted. Also, I don't like the use of the word EBITDA. I just want profit and cash flow. But normalised EBITDA guidance for financial year 23 at the lower end of the range of 160 to 190 million. So even though they're hitting their original guidance, it's at the lower end of that range. And I have seen the market react negatively to these sort of trading updates. And we have definitely seen that with Bega Cheese. On the day, the Tuesday, share price dropped, what was it? Not much. Pretty sure this was released on Tuesday. Maybe it was Wednesday. But we have really seen the share price plunge over the next or the last 3 trading days of the week on pretty big volume, and the share price has fallen through a support level at $3.10. That support level got a line going all the way back. I think I just put that line. So yeah, last time share price was this low was way back in 2013. We are talking about a 10-year low for Bega Cheese, and the share price, the chart does not look nice at all. This is an ugly looking chart, pretty big volume. So not interested in this company. But another reason why you should really pay attention to trading updates. Just look at the reaction from the market on this particular trading update. We've got 15 minutes. Next company is Kingston Resources. So I was paying attention to this company because this company is in production. It looks like maybe they were even cash flow positive, that sort of thing. Looks like the share price was trying to move into an uptrend, a little bit of volatility. Share price was sort of in a trading range between about 8 cents and 13 cents. So the share price got to 8 cents, you bought. The share price got to 13 cents, you sold. And then the company announced a capital raising. I was a little bit surprised because the company is generating cash in their operations. So this $6.5 million capital raising for Mineral Hill production expansion, and it was at a pretty big discount. I think the capital raising was done at 8 cents, and that's why the share price absolutely plunged. On the day they announced the capital raising, share price dropped 20%, and the share price has kept on falling. Share price has closed at 7.8 cents, and share price, this could be an interesting buy because the share price, if you just drew a line, I'll do this again. If you just draw a line here at the previous lows, now when I draw a line, don't think of that line as a set line. Think of it as a zone. So I'd say the zone is between about, say, 8.5 and 7.5 cents. And whenever the share price gets to that zone, that's a good time to buy since June last year. So last year, this has been sort of the price point to buy Kingston shares. But the market did not like this capital raising at all. And I think the share price right now is below the capital raising price. There's also a placement. Yeah. Anyway. Next company is another company I've never heard of, Forrestania Resources, 63 pegmatite intersected in successful maiden calypso drilling. So I'm not going to go through exactly what they found, but look at the reaction from the market on the day. Share price up 97%. In fact, it closed at 15 cents, but at one point during the day, the share price was as high as 23.5 cents. So the share price was almost up. The previous day, the share price closed at 7.6. So the share price was up almost 200% at its peak on the day. The very fact there was a lot of selling during the day is a bad sign moving forward. And then the next day, on the Wednesday, share price dropped 30%. Share price dropped another 11% on the Thursday and another 5.4% on the Friday. And the share price is almost back to where it started. And again, this one-day candlestick would make you very nervous if you know how to read it. A lot of selling came in the day. You don't want to see these red candlesticks or black candlesticks if you're looking at the black and white ones. You want to see a green one with not much of a shadow above. And the best way to get that sort of candlestick is if there's no resistance. So go back in the past for Forrestania, there was a lot of shareholders who bought at these prices back in the last half of last year and the first bit of this year. So if you look what I'll do here is I don't know if I can do that. Price range. So what I do, so see that this range here where the share price was on that particular day, and just look back in the past. So many shareholders bought at that range, and that is resistance. That's why the share price plunged during that day, even though it went as high as 23 cents. That's why the share price fell even further the next few trading days, because of all those shareholders who bought in the past, and there was not enough demand to meet that supply. It's all about supply and demand when it comes to trading, even investing. So, yeah, not interested in that company. Paws, no interest in the market for this trading update from Paws. And things are still moving in the right direction for this company. So revenue between 24.5 and 24.7 million, pretty good growth from last year. So year-over-year growth rates, we're talking about pro forma, about 60%. In marketplace and e-commerce, pretty nice growth in both those areas as well. So things are moving. Business is moving in the right direction for Paws. Unfortunately, the share price is moving in the absolutely wrong direction or opposite direction. And the most likely reason for that is this company is not profitable. And in fact, the share price, no reaction for the market. Share price has been as low as 8.7 cents recently. And yeah, since this company listed on the ASX, the share price has not been lower. So share price of Paws still in a downtrend. We need to see some better financial news from the company. We need to see the company is becoming profitable, or we need to see interest rates starting to lower. That would actually be helpful for Paws if they don't become profitable. Serko. Now, this is a definite shift in trend and a definite shift in sentiment. I've heard some people say you can't determine where sentiment shifts. This is an ideal instance where you can see an instant shift in sentiment. So sentiment was negative for a long period of time, all the way until the 17th of May. And just look at it shift. On one day, share price up 37.7% on massive volume. That was a shift in trend. That was a shift in sentiment, and the share price has kept on climbing. And then the company released another trading update, another positive trading update, and the share price has kept on moving up. So nothing wrong with Serko right now. Now, I'm not the biggest fan of this company because they're still not profitable, but they are growing. And the last time the share price was this high was between about May and September last year. So there might be a little bit of resistance, but that's good because the share price is just creeping slowly up. And the reason the share price is slowly creeping up is because if you could look at that period between May and September last year, the share price just went sideways, which means there was or is a few shareholders who bought it in those prices back then who might see the opportunity to sell out now. So there's an added supply in Serko shares on the market, but we have the demand to take that added supply, and that's why the share price, what it's doing right now, looks pretty good. I'm going to say this is a really good looking chart right now. I think this is a definite shift in trend and a definite shift in sentiment. And even though I'm saying all that, I'm not a shareholder. I've thought about taking a position in Serko over the past month or so, but I just never hit the buy button. There's a lot of opportunities out. You don't have to buy into every single opportunity. That's what I've discovered. Kip McGrath, another trading update. You'll notice a lot of trading updates. That's the reason behind that. But the share price of this company was in a downtrend. Look at that beautiful downtrend. And then they released this trading update. I believe they tutor that sort of thing. And trading update sounds pretty good. And in fact, they mentioned observed improving trading conditions in the second half of the financial year. Fairly low market cap, and the company has an EBITDA between 6.4 and 6.8 million, and this company is profitable, marginally behind the prior year at 1.7 to 1.9 million. However, even though the market did react nicely to this, up 14.3%, you could just see there's no reason to be excited by this trading update and the chart because the share price hasn't moved out of the downtrend. It's still in the downtrend. This is not a breakout. Another trading update to initially get excited, but then you look at the chart and go, well, the chart tells you that, no, sorry, not for me. Invex Therapeutics. So this has been a really interesting story on the ASX over the last 6 trading days. So on the 23rd of June, the share price for this company rose 55.8%. And then the next day it was down 12.5%. The next day down 13.3%. The next day down 51.6% because of this announcement. The update on the Evolve Phase 3 clinical trial and initiation of an independent blah, blah, blah market assessment. And just the key points, lower than expected enrollment trajectory due to higher screening failures and slower site activations than expected. So the share price fell 51.7% on this particular announcement, then dropped a further 11.4% the next day. And today, is up 2.6%. So the share price is significantly lower than before, the day before that initial positive announcement. So the share price before that was 38.5 cents. Share price now is around 20 cents. So a lot of volatility in Invex Therapeutics. And I will move on because massive volume has come in, and this is an ugly looking chart. Now to a company I do own, so I have no bias in this company. The main reason I continue to own Fenix is because a really good dividend yield, and if the iron ore prices remain above $100, that will be really good for Fenix. And they acquired Mount Gibson's Midwest Iron Ore and Port assets. This is a really intriguing acquisition. I once was a Mount Gibson shareholder, and I decided to sell my shares in Mount Gibson. And the market liked this announcement. Nice little reaction. Share price has bounced from around about 25 cents up to around about 28 cents, closed at 28.5 cents. So nice little bounce, pretty good volume as well. So I'm liking this announcement. I'm liking the market reaction from the announcement. And there's no reason for me just to sell out of my Fenix Resources shares right now, because really good dividend yield. And again, as I've mentioned, this should lower their cost to get the iron ore out of the ground and sell it. And if they mentioned here, C1 cost savings of $5 per ton, so that will be beneficial long-term for Fenix Resources. So the management of this company keep doing the right thing. They keep making really good strategic acquisitions. Go Fenix. Xtek. This is a guidance update. And this was a profit upgrade or EBITDA upgrade, or revenue upgrade. So revenue upgraded to be between 86 and 88 million, previous 82 million. EBITDA expected to be between 9 and 10.5 million. Opportunity pipeline exceeds 200 million. Just look at the share price, was in a downtrend. The market cap of this company is something ridiculous like 30 to 40 million, yet they're expecting EBITDA to be between 9 and 10.5 million. So this company is trading on 3 times EBITDA. So the market is wary about something. And I think the market is saying to us right now, they don't expect Xtek to perform like it did in financial year 23 in the next few financial years. Because if Xtek proves the market wrong, this is one of the cheapest companies on the ASX. A nice little bounce on the back of this particular guidance update. Share price has gone from about 38 cents up to closed at 43 cents. So it's a nice little bounce. But again, share price of Xtek is still in a downtrend. This is not the breakout we are looking for. And the best way to get a breakout is just to see a nice long consolidation period. Got to hurry up. Whew. A company I have never, well, I have heard of this company, but I've done no research. Shape Australia. I just think it's some sort of diet company, but it's not diet company. But this company looks pretty big. Revenue, well, they anticipate revenue to be in excess of 800 million. But just the very fact they have $850 million of revenue, but EBITDA is expected to be around 19 million and profit is expected to be around 10 million. Just because of those really low margins, just tells me this is like a mining services company or construction company, something like that. Share price in a downtrend, and just like many other companies that did release positive trading updates, because the share price is a downtrend, you can just sort of ignore this trading update for now. They need to release further really positive trading updates. So I might put Shape Australia onto my research to-do list because I have done no research on this company. I have not even looked at what this company does, but just based off the margins, probably not manufacturing, construction, mining services, that sort of thing. Next, Science. I once held this company for like a month, and it was just a trade, very short-term trade. Share price was an uptrend. In fact, I'll show you. Here it is. Back in the middle of 2021, share price moved into an uptrend. I went, oh, let's just trade this. Beautiful uptrend, and then the downtrend failed in July. So it was like 3 months I held this company for. And so I sold around about $1.50. Maybe it was a little bit more than that. And current share price, you just see the share price moving into a downtrend. Current share price is just above 50 cents. And this was a positive announcement. Product sales in the second half to be above 5.6 million. So everything's moving in the right direction. They do mention here, this increase in sales is due to the increased investment in sales and marketing. This company's not profitable. They're burning through a lot of cash. And that just tells me they're spending more money in sales and marketing, and they're going to be burning through even more cash. The market liked it. Up 20.8%? But you can just see, even though the market share price was up 20.8%, the share price was similar levels at the beginning of June. So, yeah, not interested in this company. This is not a breakout or anything like that, but a nice trading update from Next Science. But they have to show they can become profitable. I need to see a path to profitability for this company. ArchTis awarded $4.1 million contract with the Australian Department of Defence, the second company with a contract from the Australian Department of Defence, but the number is significantly different. Ventia had a, $400 million contract. This is $4 million, but the market loved it. Share price for ArchTis up 27.5% on the day, but just look at the chart. So even though the share price was up a lot on pretty good volume, share price is still in a downtrend. In fact, the share price was this level back on June the 14th. So the share price had fallen a lot before this particular announcement. So even though it reads good, looks good, share price still in a downtrend. We need to see the trend change. We need to see sentiment shift. This could be the first sign of a shift in sentiment, but it's not there quite yet. And the final announcement is guidance update from McMahon. I'm pretty sure this company has something to do with coal services, something like that. Massive revenue of about $1.9 billion, but underlying EBITDA of between 105 and 125 million. And I'm pretty sure this company has a market cap of 325 million. So again, just like many other mining services companies, just like construction companies, very low margins. And just look at the chart. Nothing to get too excited when it comes to McMahon. Share price is in a downtrend. Even though share price did rally 19%, this is not an end to McMahon's Holdings downtrend. Let's look at the weekly chart. So the weekly chart is in a downtrend as well. So a nice announcement from the company. Guidance update was good, but the share price is still in a downtrend. So I think that's it. Yeah, that's it for today. I am off my lunch break right now, so I should end it. So if you have any questions about any companies I featured in today's video, just leave those questions, your thoughts, in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.